Hi, and thanks for joining me. What I'm going to do today is show you TurnSignal and the TurnSignal indicators. This is a set of 8 trading indicators that we believe can help you make better entries and better exits and help you in your trading. This is not a trading system per se. It's a set of 8 separate indicators, but when you take 2 or more of the indicators and put them together, we believe you can make trading systems of your own or add them to the indicators or methods that you're already using to help you feel more confidence about the trades that you make and help you stay in trades longer or perhaps even avoid bad trades that all of us like to avoid. TurnSignal offers a full 30-day free trial with no credit card required. You can get a free trial with one of our 4 platforms: NinjaTrader, eSignal, MultiCharts, or TradeStation. And as long as you haven't had a free trial before, we'll be happy to give you the indicators for 30 days, let you make them your own, internalize the use of those indicators, and help you become more confident in your trading. We have people using the indicators by themselves. We have people combining them with other indicators and with other trading methods, and we encourage that. We think that we have a simple, effective set of tools to see the market better, and we encourage everyone to take the free trial and give it a try. I'm going to put up a chart with a candlestick chart with no indicators on it, simply a standard candlestick chart. This is the S&P E-mini on an 8-10 tick chart. When the candles are red when they close lower than they open, and green when they close higher than they opened, and otherwise they're basically a mixture of different colors and don't really give us much help in finding direction in the markets. 3 of us had been trading together, and we saw some other momentum style indicators, and we decided to try to make our own. And the first one that I'll show you is our namesake indicator, TurnSignal. Now, I happen to be using our NinjaTrader version, and all of our indicators in NinjaTrader are located in the same space. Well, they all begin with the TS small I prefix, so you can identify them. And I'm going to add TurnSignal to the chart, and you'll see that what TurnSignal does is identify changes of direction in the market and change the color of the bars to identify when the market is moving higher and when it's moving lower. The way it works is that it looks back over the market about 20 bars or so at the close of every bar. So every time it closes, it's looking back over different data because it's looking back over the same number of bars. And once the color changes, in this case to green, the price may have its ups and downs inside the move, but the TurnSignal indicator is designed to keep you in that direction for as long as possible. We didn't want to build an indicator that was constantly changing color. We didn't want to confuse things with more than 2 colors. And we do have ways of identifying when you're getting a mixed signal, but we use the other indicators for that. And we just wanted it to stay the same color and make it simple. Once the algorithm looks back at this bar, looks back over the 20 bars or so, and determines that this is now a turn in the market, it changes the color of the bar to red at the close, and then keeps the bars red through this down move until it reaches this point where it looks back. Again, it's looking back at every bar, but here it finally reaches a point where it looks back and says this is a turn, finds that turn and turns the bars green, and now stay green until there's another turn. Now you see here it turned for a while before it decided to change the color to red. And I don't think I'd want to be long in here, but there are ways for us to identify those places where the price is starting to come down even though the color hasn't changed, and I can show you some of those. I'm going to add our next indicator called our fast line. Our fast line is one of our 3 lines designed to trail the price. Fast hugs the price the closest and trails the price slightly, so that when the price is moving higher, you can see that what's happening here is that the price is pulling that line up. When the price levels off, the line levels off and sits there on top of the bars, and when then these bars move away again, it starts pulling the price higher. The same thing on the way down. So now we have 2 ways of identifying direction in the market. And if we look at the position of the price bar to the fast line and see when it's pulling away from the fast line, we're also identifying momentum. But with direction, once the color of the bar is green and above the fast line, then we have 2 signals that the price is moving higher. Again, once it's settled settled and not moving in either direction, the fast line has a chance to just sit on top. Then it pulls away again, settles again, starts down a little bit. This price bar is still touching, so still on. I use a rule on or above. Once I'm in a trade, I don't want to be jumping in and out too often, so I'm going to give it a chance to work, and basically all the way up here I believe we are on or above the fast line. When the price changes direction, this bar right here is under the fast line, doesn't touch the fast line at all, and that's the first place where you could, if you were long in this move, you could exit the trade here. It's not going to give you very much, but it's not the indicators that make the money, it's the markets. The indicators only help you get in and out of trades at the most optimal times. So the color is still green, but I would probably be out of this trade here if I were just using these 2 indicators as a trading system, so to speak. And now this bar, when it closed, changed to red, and now this bar is red and makes a new low, and it's underneath the fast line, and that looks like a good place to enter a trade, and no reason to exit the trade on using the on or below rule and the red bar. Still the same rule is intact. Everything's still the same until here, where this bar changes to green and goes above the fast line. This may be touching, but it did change to green. So at the close of this bar, I would be out of that move anyway. And that's basically two indicators out of our package of 8 that are showing you what you didn't see before. You're getting to see when the market is heading down by the color of the bar and the position of the bar to the fast line. Here you can see it's not really pulling away as much. It is above all the way up, but now here's the first bar that's below the fast line, and that's a good place to exit, as we can see. Now I'd like to be short here, but for all the times that we have opportunities to buy and sell during a trading day, this is a small price to pay to avoid. You can exit the trade and capture whatever profit you made. The function of the algorithm that makes up TurnSignal was sort of a balance for us to create, and we decided that it was better to keep it the same color for as long as possible, keep you in the move, and use the other indicators to exit. So while I would like it to turn red here and get me in this nice long down move, I could still get short down here if I wanted to, but I'm not giving back the money that I just made, and that's important. Holding on to the profit and avoiding the loss are 2 very important things in trading. Okay, now I'm going to add our next line called our medium line. And medium fast, medium, and slow are the same, are basically the same indicator. They are written with the same code, running the same arithmetic at the same time. The only difference between them is that the medium line in this case is set back further from the price than the fast line, as you can see. So while the price bars are able to move above and below the fast line because the fast line is hugging the price, the fast line can move, in this case, below, where above and below the medium line. And so if you're now you can make another rule. You not only want the color to be red and the bar to be below the fast line to get short, you also want to see that fast line go below the medium line. And that's what happened here. Your exit, I think, is still the same. I wouldn't be short with a green price bar, but if not here, then here where the price bar went above the fast line, or here where the fast line crossed above the medium line. These are all exits that you can choose. I choose the quickest when I have a profit. Some people like to try to milk a little bit more out of it. To each his own. Like I said, there are no two people that use these indicators the same way. I haven't met them anyway. And so we encourage everybody to take them and use them as best they can in their own way. The other thing the medium line does is act as a convenient trailing stop. If you were to enter this trade short and stay in the trade based on this rule of on or below the fast line, it's my opinion, if you're moving, if this is a fast chart, which it is, it's a relatively fast chart on a fast time frame, on a fast market rather, and this trade from the first red bar to the last took about 25 minutes. I would be watching it for 25 minutes. I wouldn't be setting stops, but if you prefer to set a stop, that medium line is a terrific place to put one. Once the price breaches it, you would exit, or if you wanted to set a stop where the price went above it, you would exit. Here's that first place in this particular move. But over here, if you were long in here and then were looking to exit the trade, here's your exit. Price below the fast line, even though it's green. Fast is now below medium, so we don't want to be long anymore with fast under medium. In fact, back here where fast crossed below medium, this would probably be the exit right here. So that helps to know that that's happening, that the market has, the price has changed direction, and that's what the indicators do. Let me add the last one, which is our slow line. It's our yellow line. And I don't really use it for entries and exits so much. I think it's too slow. Some people like to trade the trend, and it makes for a handy trend identifier, or if not a trend, then to identify when a move is continuing in that general direction. This is pretty clear. I mean, the price, the colors are red, the price is generally below the fast line. Fast and medium aren't really near each other, same with medium and slow. So it's pretty clear that this is a down move. It's not really trending so much. There are waves in this move, but it's not so much a trend. I'll address that in a minute with other indicators. But following a trend, while I like to use the fast crossing the medium line to look for entries and exits, using medium to cross slow is where the trend identification can come in. Once medium goes above the slow line, then you could call that an upward trending move, and that stays that way until here. Same thing on the downside. Here's the beginning of the downtrend, and here's the end down here. This is where, here, where medium finally crosses back up above the slow line. I don't use it that much, but trend following is very popular, and this is one of those things that you can use for that. And I'm going to add our next indicator. I suppose you could also use the slow line as a trailing stop. That also functions the same way. Our oscillator. See, that slow line could also be a trailing stop, but it takes longer for the price to hit it. And so you are, if you were using it on the way up here, the price was hitting this medium line already over here. It was also hitting the slow line because the lines are pretty close to each other. I've added our oscillator. Our oscillator is a separate indicator that does a couple of things. First of all, you can see direction with our oscillator. You can also see a fine-tuned version of momentum. The direction is when the oscillator bars are above this black line, which is the 0 line. The value of the oscillator bars above 0 are positive, and below 0 are negative. When the oscillator bars are green and above 0, it's identifying strong upward momentum. When the momentum weakens above, it's still upward momentum, but when it weakens, when it's not as strong to the upside, we get red oscillator bars that get a little smaller. Here there's another attempt for the momentum to get a little stronger. It's a little weaker than the previous wave, and the price went a little higher, which some people like to use to identify divergence. When the price is high, when the price and the momentum don't agree, it often signals a change of direction. It's not something I use personally, but I know other people do. People point it out all the time that it's a very easy way to identify divergence. And then finally, when the direction does change, remember we talked about the waves waves inside this move, and you can see them quite clearly with the oscillator. The strong down move, a little bit of a resting place, and then tries to get strong again and softens while the price levels off here. The price is sitting on the fast line, and the oscillator bars are showing a weakening momentum to the downside. Then another wave down and a rest, and another wave down and a rest and a change of direction. More divergence, by the way. So this using the oscillator with the other indicators that are already on the chart, you can make more rules. Yes, I want the bar to be red to get short. I want it to be under the fast line. I want fast to be under medium, and now I want the oscillator to be under 0. I also don't want it to be tiny like this one. I want it to have some substance to it. The longer the oscillator bar, the stronger the downward momentum. So I'm looking for a place where that downward momentum is confirmed. And so that's a pretty good, I call it alignment. It's a pretty good alignment of the indicators right there. Let me add one of our pivot. We have pivot lines, a set of pivot lines. And we designed those also with trending markets in mind, but they do a lot more than just find trends. In fact, I think our slow line is a handier tool for finding a trend when medium crosses slow than using our pivot lines. But let me explain how our pivot lines work. Pivot lines are looking for back pivots, top and bottom, high and low back pivots. And in this example, the price came down and made a bottom right there, and came off the bottom enough on this bar to allow the pivot line algorithm to identify this as a pivot low, bring the pivot line down to identify the new pivot low. Then the price comes up, and not down enough there, not enough there, not enough there. I guess here, when the price breaks through at the top here and makes a new high, and then starts down on this bar right there, that's where the algorithm identified this as having come off the top enough to move the pivot line. That pivot line moved up to identify this as a new back pivot. and then down again. Down comes the price and comes off the bottom enough to move this pivot up, and then doesn't break out at the top. So the pivot line stays where it is all the way across here and doesn't really move until the breakout occurs. The price comes all the way down, makes a low, and comes off enough to move this pivot line down to identify. That's the bottom pivot, and then it does the same with the top pivot. So pivot lines are searching for back pivots, for high and low pivots, and as a result what we're getting is an indicator or two that give us the range of the market, show us when the market is range bound, show us when the price breaks out of the range, and when it doesn't quite get out of the range. So if you're trading, I find that on fast charts in fast markets, there's another tool that I like a little better, which I'll get to, called our pivot median. But in slower markets, in markets like Forex and currency futures, where the price has a has a tendency to drift sideways and then break one way or the other, this is a very handy tool to identify when that breakout has occurred or not occurred, and then when it finally does, where that breakout is. Now in this case, the price kept coming down. The price came off the bottom enough to move this pivot line down, but the price stayed on the fast line, didn't go above it. So you could make a case for staying in the trade beyond this first pivot change. The pivot change to me is identifying the end of this move, because it came off the bottom enough to move the pivot line to identify this as a pivot low. But since the other signal didn't come, since the price is still on the fast line, and now the price is below the fast line, my other rules are still intact, well, you could make a case for staying in. Now the price comes down even further, and then on the next time that the pivot line changes, we actually get the color change at the same time. So that's two identifying signals telling you that that's the end of that move. Notice, the more indicators I add to the chart, the more rules I get to make. I'm not necessarily an advocate for too many rules. If you think back on that first example where I had just had the turn signal indicator with the fast line, I mean, that's two rules, and that was a viable way of trading the market. Now, using the medium line, adding that, adding the oscillator, making a rule that it has to be below 0 or above 0 to get long, adding the pivot lines to identify when the moves are over. These are all additional tools you can use to make your own trading system, or add whichever ones you want to the ones you're already using. I'm going to add our next indicator, which is called pivot median. I mentioned it earlier. Pivot median is this dotted line between the top and bottom pivot. And wherever the pivot lines go, the pivot median will change to put it back between the top and bottom pivot. Then this pivot line comes down, pivot median comes down, and gets back in between to the median between top and bottom. Now we created this line because, remember, we were looking at trends in using the pivot lines to identify trends, and we wanted to find out when the price retraced 50% in a trending move. So here the price is coming down, and it's well below the median, this being the median, the dotted line. Price is coming down, the median comes down, but the price is still under the median. No reason to exit the trade. You could make a case for staying in the trade. I wouldn't. I like getting out on the green bar. But on the flip side, entering long, I would be waiting for that price bar to go above the median, because until it does, I'm not convinced that the market is trading to the upside. And so waiting for that entry here or here, getting that bar above the median and then then looking for a higher high, it's not really that interesting a trade in the end. Here's where the fast crosses medium and you would exit. It's about a break-even trade, but it's a better bet to wait for that for the price to be trading above the midpoint of its recent range. That's what I've been finding. And the same thing's on the downside, except here I'm still green, so I'm waiting for the red bar. In fact, that red bar comes at the breakout below the pivot line. I'm looking for an example here, but I don't really see one where I would not get there are times when if the color here changed to green briefly and got back to red again, and the price never went above the median, that's a good example of how I would stay out of the trade. And that's one of the things I do to stay out of trades. I like to also wait for that higher high, and in some cases I'll even wait an extra bar to make sure it is going higher. Because these days, lately, the markets, the E-mini markets have been rather stagnant and rather choppy. So waiting until I'm sure that move is on my side, it does keep you out of bad trades. Let me remove briefly the pivot lines, just so you can see a little more clearly what this is like to use this dividing line, this pivot median, waiting for the price to be below to get short, and waiting for the price to be above to get long. Short, long, and short again. And it requires a little extra patience, but I think patience is a very important thing in trading. And I think that it's a very useful tool. I'm going to add the pivot lines back in and add our last indicator, which is called market activity. Market activity is our attempt to find activity in a market that is not time-based. In other words, when you trade a 1-minute chart, you get a new bar every minute, but the volume indicators that are out there were showing us how many transactions were done in each of those 1-minute bars, so you could differentiate when there's a lot of activity and when not. Well, we couldn't do that with a tick bar because the tick bars were all the volume indicator was telling us that the tick bars were all the same number of transactions, which is true. And range bars are all the same range, and volume bars are all the same number of contracts. So we thought about how we would depict activity in a tick market and the others, and we came up with the idea of measuring the time it took to form a bar. So each price bar gets a blue line, and the taller the blue line, the faster the bars are forming. The line going across is an exponential moving average of the tops of the blue bars. So when the blue bars are forming faster, when the price bars are forming faster, the blue bars are taller, the activity bars are taller, and when the price levels off here and there is not as much activity, when the prices are forming more, when the bars are forming more slowly, you can see that the activity bars aren't quite reaching their average. And then again they do, and then they don't, and then again they do, and then it's kind of mixed. I mean, this is not bad activity, considering it's all above that 50% line pretty much. Here's where it kind of levels off and drops a bit. That's where that up move didn't quite work. And you can see it in the activity. You can see it in the smaller oscillator. So if I I would say that if you're in a trade and you can see that the activity is dropping off, it might be one of the reasons you would exit the trade. If you're looking to get into a trade and all of a sudden you see these bars picking up, again, that could be a helpful hint in deciding to get in. It's just another tool. It's another way of looking at things. And that's our 8th indicator. And our package, that's our entire package. Now, let me also add that TurnSignal indicators on all 4 of our platforms are callable in the programming language of each of the platforms. So you can use easy language with TradeStation. You can also use it with multi-charts. You can use EFS with eSignal and NinjaScript with NinjaTrader. And you're able to call the values of the indicators in order to create your own strategies, backtest those strategies, and even automate those strategies. Now, the way that you do that in each platform is a little different, but what we've done is create what we call a sample strategy for each of our download packages, and that sample strategy is not a working strategy, but rather sort of a lesson plan on how to write strategies. So if you are a programmer, or if you have a programmer friend who writes strategies for you, you can use the sample strategy to see how to call the values and help you get started with writing your own. We've also added in our Ninja platform, our Ninja version, let me put up the, let me show you what we've done. We have created a set of alerts. It is one of the, it gets on your chart like an indicator. I'll show you that in a minute. But what it does is it allows you to add 4 different alerts and 6 different events. So, and the various alerts are the NinjaTrader alert window, which is part of their software package. And once an alert occurs inside the chart, on the chart, the alert window writes a line in the alert window to tell you what the instrument was, the time that the alert occurred, and what happened. So in this case, the color changed to green. That same alert would look like this on a pop-up. This is something that we also provide. This is another choice. We also have audio alerts built in that you can call on, and we have you can send yourself an email. If you want to configure your alerts, you can first of all the various alerts are breakout, which is breaking above or below the pivot lines, color, which is red or green, market activity, which is breaking above its exponential moving average to show that activity is picking up. There's oscillator color, from red to green to red, or oscillator value, which is when the oscillator goes above or below the 0 line. And finally, there's the speed alert, which is fast and medium crossing. So in a typical example, if you wanted to be alerted to a color change, and you wanted to get an alert window entry and an audio alert, then you would put a 3 in this window and true, and then every time the color changed, you would get an entry in the alert window and the color, and there would be a sound, an audible sound. A lot of this is configurable by you. Let me go back to the chart and add this. Notice it looks like an indicator, but the values are all in the parameter window next door. And again, putting in the numbers give you the choices of what you want to do, how to combine the alerts, one or more of the alerts. and it's fairly easy to figure out, fairly easy to use. And that's my presentation. Once again, I'd like to remind you that we are TurnSignal and the TurnSignal indicators. We offer a 30-day free trial for NinjaTrader, eSignal, Multicharts, or TradeStation. Our email address for support is support@turnsignal.biz, and our web address is simply www.turnsignal.biz. And I want to thank you for attending. If you have any questions, please contact us, and hope to speak with you soon. Before I go, I want to just add one more thing. I also offer live demonstration sessions. We open our demonstration room Tuesday, Wednesday, and Thursday mornings at the market open, which is 9:30 a.m. Eastern U.S. time. What I do is I open the room for all comers, whether you're a free trialer, a subscriber, or just someone taking a look at the indicators. And I run through a demonstration similar to this, or if you've already seen this demonstration in a video or somewhere else, then I answer questions. I'll add a chart that you'd be using sometimes. I can change things around and answer any questions that you have. And I find that the people that do take advantage of these live sessions have a much better chance of succeeding with the indicators. Also, if you do take a free trial, you'll be invited to a weekly workshop session on Wednesday afternoons, which is limited only to people who have the trial. I've also had some subscribers in there from time to time. And that's basically people who've already used the indicators and they have a better idea of how they work, and so that the questions are a little different, and I still give, still question and answer session. You'll be able to see my chart and hear my voice, and if you have a microphone, I'll be able to hear your voice. So I hope to speak with you all soon. Please give our indicators a try. There's nothing mysterious about them. They're simple indicators that work really well, telling you what's going on in the market to help you become a better trader. So on that note, thanks again, and bye-bye.